Hello, everyone. How are you? It is, let's see, what's today? It is June 21st, first day of summer. Welcome to my information here. I've been wondering if you were to get a loan last or buy a house last year for $350,000 and you had $50,000 in a down payment, how much would your loan be then versus now with the higher interest rate? So in 2021, you found a house for $350,000. You put $50,000 down. You financed 300,000. Last year, if you had good credit, a lot of people were getting under 3%. So I went at 2.8%. At 2.8%, 30-year fixed, your principal and interest, this does not include your taxes and insurance, because that would depend on where you live. So principal and interest only, your payment would be $1,233. And the total payments over the life of the loan, you would be paying $443,880. So that $300,000 loan would cost you $143,880 over the life of the loan. Now, fast forward to now. Say you want that same house, which last year was $350,000. This year, because of the housing market and fewer homes on the market, that same house is going to cost you about 20% more. So that $350,000 home last year is now selling for $420,000. Say you still had your $50,000 down payment, you're financing 370,000. Your loan amount is going to go up to, or your payment amount instead of 1,233 is now going to be 2,266, $2,266. And your total payments over the life of the loan, instead of 443,000, is now going to be 815,760. So instead of the 143,000, you're now paying over $445,000 interest for that same house. So the third scenario here is, say you kept your budget at 350,000. Now you're going to get about 20% less, or 20% smaller, 20% older home, not as in good shape, but you still kept your budget at 350,000. You put your 50,000 down, financed 300,000 at 6.2%. That's about the going rate. That's what I figured this last one onto, the 370 at 6.2%. So now we're doing 300,000 at 6.2%. Your principal and interest payment is going to be 1837 compared to the 1233 payment last year. So it went up about 50%, so $600. Over the life of the loan, you're paying $661,000, and that's just the interest on that would be $361,000. So compared to the $143,000 for last year. So these interest rate hikes are significant. They are significant as far as your pocketbook goes, and the amount you're going to pay. Unfortunately, to decrease the demand for homes, you have to price some people out of the market. And that's really kind of what's happening here. So if you are still thinking about buying, it doesn't seem like this is going to turn around anytime soon. They're talking about a recession, possibly at the end of next year. No one has a crystal ball. So if you're selling, it's still a great time to sell. Things have slowed down a little bit, especially in the upper price ranges, above 450. 500,000. That market's slowed up a little bit. Anything in this $300,000, $400,000 price range, low 400s, are still selling here in Fairfield Glade. But you better have a place to go, because it always helps if you have cash, because that will save you a ton of money on these interest rates. So have a great day. Happy first day of summer. And we hope to hear from you soon. Bye.